Hello and welcome, dear traders and investors. I'm glad to present you the daily market review prepared by analysts and experts of fx.co portal. Here we go. Today is January 31 and we're starting from trading tips for GBP USD pair with Jakub Novak. But first, let's have a look on 5-minute chart for analyzing yesterday's transactions. Pound tested 1.2374, but the MACD line was far from zero, so the downside potential was limited. Sometime later, another test took place at 1.2405, but the MACD line was also away from zero that time, so there was no large movement. No other signals appeared for the rest of the day. UK statistics that are published this morning are unlikely to support pound as the data on M4 money supply and approved mortgage applications do not play a big role for traders. Thus, expect continued pressure on GBP USD, especially ahead of the monetary policy meeting on the Federal Reserve. In the afternoon, the US will release a report on consumer confidence, which, if shows an increase, could prompt another decline in the pair. The Chicago PMI report, on the other hand, will be of little interest to the market. You could buy pound for long positions when the quote reached 1.2369 and take profit at the price of 1.2416. Growth could occur if the level of 1.2330 is not broken. However, when buying, make sure that the MACD line is above zero or is starting to rise from it. Pound can also be bought at 1.2330, but the MACD line should be in the oversold area, as only by that will the market reverse to 1.2369 and 1.2416. For short positions, you could sell pound when the quote reached 1.2330 and take profit at the price of 1.2290. Pressure will remain if sellers manage to break the support level of 1.2330 before the Fed and Bank of England meeting. However, make sure when selling, the MACD line is below zero or is starting to move down from it. Pound can also be sold at 1.2369, but the MACD line should be in the overbought area, as only by that will the market reverse to 1.2330 and 1.2290. We've got a trading signal for gold by Dimitrios Tapas. Let's have a look. Gold is trending within the range of 1915 and 1935. This consolidation is due to the investors awaiting data regarding the Fed's monetary policy meeting and US non-farm payrolls. The US Federal Reserve, the European Central Bank, and the Bank of England will announce their decisions on monetary policy between Wednesday and Thursday. This could trigger strong volatility in the market and gold could move out of range. In the next few hours, gold is expected to continue trading within a range of 1915 towards the 21 SMA located at 1930. A sharp break above 1931 could mean an acceleration to the upside, and the price could reach 1949. and even the psychological level of $2,000. On the contrary, in case gold falls and consolidates below 1915, it will be a clear signal to sell, with targets at the psychological level of 1900. The metal could even reach 68 Murray at 1875. Our trading plan is to buy above 1920 with targets at 1930, or to wait for any of the out-of-range areas to give us the signal to buy or sell. The Eagle indicator reached the extremely oversold zone. It's likely that in the next few hours, gold will rebound and could reach 1930 and even up to the Murray 78 at 1937. The next in line is Lowry Bailey with AUD USD pair forecast. The Australian dollar lost 47 points yesterday. It led losses, but technically there are no signals of a trend reversal yet. We just assume that the price broke off from the MACD indicator line. And now it's about to do that. There's a chance that the price will meet the MACD line near its intersection with the support level of 0.6873. Low of January 19, low of August 5, 2022. The Aussie fell this morning due to weak retail sales in December. A little later, the Chinese Manufacturing Activity Index for January of 50 points against December's 47 points stopped the AUD-USD decline. On the 4-hour chart, the price settled below the MACD line, blue line on graphic. Also, the price overcame the support of the local low of January 25. The Marlin oscillator is in the area of a downtrend. We wait for the results of tomorrow's Federal Reserve meeting. That's all for today. See you next time. Good luck.